Ladies and gentlemen, thank you for standing by, and welcome to the Tesla Q3 2020 Financial Results and Q&A webcast. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question-and-answer session. To ask a question during the session, you will need to press star 1 on your telephone. If you require any further assistance, please press star 0. I would now like to hand the conference over to your speaker, Mr. Martin Vika, Senior Director of Investor Relations. Please go ahead, sir.
Thank you, Sherry, and good afternoon, everyone. And welcome to Tesla's third quarter 2020 Q&A webcast. I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q3 results were announced at about 1 p.m. Pacific time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please press star 1 now if you would like to join the question queue. But before we jump into the Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. All right, so Q3 was our best quarter in history. We achieved the record production and deliveries, record revenue, record net income, both GAAP and non-GAAP, and record free cash flow of $1.4 billion. This is really due to the amazing execution by the Tesla team. I could not be more proud to work with such a great group of people. Just really kick-ass performance throughout the world. Of course, we had Battery Day, so we showed our plans for how we can expand in the future and improve core battery technology, core cell technology at the form factor level, chemistry level, and I think more significantly at the manufacturing technology level. Something a comment I've made in the past is that I think Tesla's long-term competitive strength will be primarily manufacturing. This is counterintuitive, but I'm quite confident this will be what happens. Anyway, so we presented what the team's been working on for a long time, well, batteries. We wanted to step back and really rethink batteries from scratch. First principle thinking, just look at the fundamental physics and say what, rather than compare to other products in the market, just say from a physics standpoint, what's the limit of physics? What's the platonic ideal of a perfect cell, and how close can we get there? That was our aspiration, and I think we've got a pretty good approach to it, which will only get better over time. So we went through all of the engineering solutions for every important part of battery design and production, and we'll continue to iterate on that and just recursively improve the core cell and battery technology. The result, we think, in a few years will be batteries that cost half as much and where the capital expenditures required are a third or less of what they are today. And we expect Giga Berlin will see our first battery cell production line at scale. Regarding the full self-driving beta release, the Autopilot team, again, just a really all-star team. I spent a lot of time with the Autopilot team, and there's a lot of really talented people on that team who've worked incredibly hard to get the beta release out. So I just really like to thank them for their hard work, and it's just a very smart group of people. So I think we're starting very slow and just very cautiously because the world is a complex and messy place, and so we put it out there last night, and then we'll see how it goes, and then probably release it to more people this weekend or early next week, and then just gradually step it up until we have hopefully a wide release by the end of this year. And of course, as the system collects more data and it becomes more robust. It's sort of like, how does Google as a search engine get better? It's because everyone is programming it by asking it questions all the time and clicking on particular links. So it's got this great feedback loop, and that makes it an extremely effective search engine. It's the same thing for autonomy. Having on the order of 1 million cars that are providing feedback and specifically feedback on on strange corner case situations that you just can't even come up with in simulation. This is the thing that is really valuable. It's not like the obvious stuff. The obvious stuff you can do in simulation. But weird corner cases, only reality can give you that. So but we're able to say, okay, we need to train the system on this corner case situation, and look for examples so we can then train against those examples and improve some very esoteric corner case. It's also important to emphasize that this is a generalized neural net-based approach. There is no need for high-definition maps or a cell phone connection. So the system is designed such that even if you have no connectivity whatsoever and you're in a place that you have never been to before and no Tesla has ever been there, the car should still be able to drive, just like a person. That is the system that we are developing and aiming to release this year. Then in terms of capacity build-out, we're making progress on 3 major factories. We're continuing to expand Shanghai significantly, which is going incredibly well. The Tesla China team is just, incredibly good. Super smart, work hard. It's like, I'm always amazed by how much progress the Tesla China team makes. It's beyond all reasonable expectations. And then we're under construction in Berlin and Austin. So also making good progress there. It's overall going well. I should make the point that for Berlin and Austin, we do expect to start delivering cars from those factories next year, but because of the exponential nature of the spool up of a manufacturing plant, especially one with new technology, it will start off very slow at first, and then become the output will become very large. Just in general, manufacturing follows the S curve, and and I think sometimes people that haven't spent a lot of time manufacturing kind of think that once you have a factory, you can just sort of turn it on and it's at capacity. But it will typically take about 12 to 18 months to reach capacity, and that is a very fast period of time, especially for new technology. I'd say 12 to 24 months even. So generally what I see is the manufacturing capacity is underestimated in the beginning for quite some time. Then it's sometimes overestimated because this is an S-curve. It goes exponential to linear to logarithmic. It's actually an incredibly hard thing just bringing a production plant to volume technology. Because you can actually think of it like you've got, to first order approximation, 10,000 unique parts or processes, all of which operate on an S-curve, and with a bunch of uncertainty, and you can just slide 10,000 S-curves on an X-axis, and that's what bringing up a large automotive plant is like. And which one's the laggard, which one's the leader, it's very difficult to tell, and it's constantly changing. So it's really one of the most difficult challenges I've ever seen. So let's see. In conclusion, thank you. All we've achieved would not be possible without the incredible hard work of tens of thousands of Tesla employees and all the people at our suppliers as well. I'd like to thank our suppliers. We continue to grow as fast as we can while focusing on cost control and improving quality. And ultimately, the best company will be that which makes great products at an affordable price, and that is our goal. I think I've never felt more optimistic about the future of Tesla than I do today. I'd also like to thank investors who have stuck with us through thick and thin. I think there's a lot more good stuff to come. All right, with that, we can move to questions.
Thank you, Elon. I think our CFO, Zachary Kirkhorn, has some opening remarks as well.
Okay, sure.
Sure. Yeah, thanks, Martin. Overall, our financial health continues to rapidly improve, with Q3 being another great quarter on nearly all dimensions, as Elon has mentioned. On net income, we achieved our fifth sequential quarter of profitability, our best net income, and nearly double-digit operating margins. Two things that are important to note to set context for Q3 profitability. First, the regulatory credits business was stronger than our expectations, and we are tracking to more than double this year compared to last. Second, as a result in the rise of the market cap of the company, the second and third tranche of the CEO grant vested during the quarter. Additionally, we have begun expensing one more tranche, resulting in roughly $300 million of combined period expense. I think it's reasonable to view the quarter excluding both these items to get a true sense of the health of the core business. On automotive gross margin, excluding regulatory credits, it increased materially from 18.7% to 23.7%, with some of our programs achieving greater than 25% gross margin. Keep in mind that inefficiencies related to factory shutdowns affected our margins in Q2. We continue to reduce our manufacturing and operational costs. We are also seeing benefits from the ongoing upward trend of locally built and delivered cars, which has increased from under 50% at the beginning of last year to over 70% most recently, which is a core component of our cost reduction strategy. We are also seeing financial benefits from improved vehicle reliability across the fleet. Services and other margin improved yet again, driven by our used vehicle business and efficiencies in our service operations. In the energy business, we achieved record storage deployments, aided by the positive reception of the Megapack and Powerwall products as production and deployments grow. Additionally, our solar deployments doubled, and we're continuing to make progress on that front. On cash flows, our cash balance increased to $14.5 billion, which includes free cash flows of $1.4 billion, our highest yet. Our operating cash flows were $2.4 billion, including a $600 million benefit from working capital, as we've made progress on days of receivables and inventory, despite a reduction in days of payables. Note that the majority of our operating cash flows are driven by the strengthening of our core operations. Capital expenses grew to $1 billion, driven by Model Y investments in Shanghai, Berlin, and Austin. As for previous investments in Model 3 Shanghai and Model Y in Fremont, we're expecting these programs to have already fully paid for their respective investments by the end of this year. Looking forward to 2021 and 2022, we have revised up our expectations for capital spending by $2 to $2.5 billion, which we have ample liquidity and expected cash flows to fund. This is driven by an increase in in-source scope for certain factories, including battery cell manufacturing, as well as investments to enable greater capacity expansion in the future. While we expect the return on our investments to remain very strong, keep in mind that with additional scope and location-specific costs, the payback of these investments may be slightly longer than what we saw in Model 3 in Shanghai and Model Y in Fremont. Financing cash flows were $4.5 billion, as we reduced use of our working capital lines, offset by a $5 billion equity raise in September. Note that we're currently expecting over $1 billion in early convert paydowns in Q4, primarily associated with the 2021 conversions, but also our 2022 and 2024s. Looking forward, we remain focused on strengthening the core fundamentals of the business. We are increasing production to meet demand, reducing costs, including localization, driving higher efficiency across the business, and tightening our cash conversion cycle. We've made tremendous progress on this front over the last year and a half. We're also aiming to achieve our original 2020 guidance of 500,000 deliveries, despite the operational interruptions earlier in the year. While this goal remains a genuine challenge, we believe it's possible with tight execution across the company. So congratulations again to the Tesla team for a great quarter and a great year. I'll hand it over to R.J. Johnson, who joined Tesla earlier in the year and is leading our energy business, for a few comments.
Thank you, Zach. First, I'd like to also thank and congratulate the team on a job well done. Q3 was a strong quarter for the energy business, and we're poised for continued strong growth in energy storage and solar. Megapack is going to be a large growth segment for the business, and deployments will continue to expand rapidly as the product reaches full capacity. We have more demand than supply through 2021, and we continue to ramp the product to match unprecedented demand across the globe through 2023 and beyond. Our order book is rapidly filling up through 2023 in the multiple gigawatt-hour scale. Large-scale solar plus storage is now more cost-effective than traditional fossil fuel generation in many locations across the globe. This trend will continue as we remove costs, which will further displace existing and new fossil fuel generation. This is true for standalone storage as well. Many customers are utilizing AutoBidder to maximize returns as we optimize our hardware and software with advanced real-time bidding strategies that continue to outperform the market where deployed. For Powerwall, we see continued strong demand for residential storage as customers seek increased reliability and backup home generation. We have a very large backlog of Powerwall orders, and we continue to invest to increase capacity to fulfill customer orders. We're just now capturing the full power of customer-sided solar plus storage as customers in some jurisdictions are providing services back to the grid when they don't need to consume energy or have backup power. This has massive potential to reduce system costs and make the grid more efficient globally. In the United States, we lowered our residential solar retrofit price to $1.49 a watt after tax incentives, which is the lowest in the industry. We're able to do this by leveraging our online vehicle ordering infrastructure, which substantially reduces soft costs associated with sales and marketing. As a result, our fixed costs remain relatively flat as our volume and efficiency increase, leading to increased profitability in the retrofit business. We're using the same methodology across the entire energy business, including service, to capitalize on the technology backbone of the company. Solar Roof is especially exciting as we've gained significant experience over the last year in the installation process, which is a key enabler to scale the business. We've recently demonstrated our ability to complete Solar Roof installation in just one day. Please note this still requires 1 to 2 days to remove the existing roof and prepare it for the Solar Roof installation. Clearly, there will be a range of installation times based on size, complexity, weather, and other factors. Overall, our reduced installation time provides a better customer experience and will enable the business to grow exponentially as scale effects allow for increased efficiency. In closing, we believe the energy segment is poised for a strong growth as we continue to focus on increasing scale while reducing costs to maximize profitability. I want to thank the team again for their hard work, and I look forward to another strong quarter ahead of us.
Thank you very much, everyone. And let's begin with questions from Set.com. The first question from retail shareholders is Tesla planning to start 4680 cell production at Vika, Berlin at the same time as vehicle production? Can Tesla share more information on what products will use the battery cells from the pilot line in Fremont?
Drew, do you want to take that?
Sure. We will incorporate 4680 design solutions into many applications in time across both energy and vehicle. And we can use our pilot production facility in Fremont to support the new factory in Berlin as it ramps.
Thank you very much. Let's go to the next question, which is question number 2 from retail shareholders. Does Tesla's tabless cell design allow for significantly higher peak charging rates? Does it improve the required taper curve?
Yeah. The fundamental limitation on charge rate in lithium-ion batteries is avoiding lithium plating on the anode. And while the tabless architecture helps avoid overheating because it's a more power-dense architecture at high continuous charge rates, it doesn't change the anode plating story. Electrode design and anode material choice more directly determines the maximum charge rate and how to avoid that lithium plating problem.
Okay. Thank you very much. The third question from retail is, would FSD be able to be transferred to our next vehicle or pay a transfer fee? It would add to a brand loyalty, the same way gaming companies and cell phone companies keep you in their ecosystem by letting you transfer purchases to upgraded hardware.
I think we'll give it some thought.
Okay. The fourth question is, what are the remaining constraints to be solved for Solar Roof installations to ramp significantly? Carl?
Yeah, this is Carl Peterson. I'm on the Solar Roof engineering and installation. The biggest constraint right now on Solar Roof ramp is getting enough installers on board and trained and experienced. We've made a lot of progress on this in Q3, and we're continuing to hire. The next opportunity is improving the material flow on the job site. We've talked about this a lot in the factory as well, that setting up the right packaging, kitting, so that every installer on the roof has the parts they need at their fingertips. Also, we've had great response from third-party roofing contractors as they're ramping up installations for Solar Roof on their customer homes, which is a big source of future growth.
Thank you, Carl.
Yeah. Now, I mean, here's a way to think about a product, in my opinion. You have to say, I think, what do you want the world to look like? When you look around the neighborhood, in the future, a decade from now, what do you want? What products are going to make your life better? What future do you want? And I think a future where we've got beautiful roofs with generating energy that are tough and resilient and better in every way than a regular roof, and alive with energy, that's the future we want. The Solar Roof is a killer product. This will become obvious next year.
Thank you. And the last question from retail shareholders is, you recently referred to Tesla as a conglomerate of startups. Other than manufacturing electric cars, what do you suppose will be the most valuable business units within Tesla over the next 5 to 7 years? Could you envision any of them ever spinning out from Tesla?
Well, yeah, I was thinking about this today. Tesla's there's probably in excess of a dozen startups effectively in Tesla. Every major product line is a startup. Every big new plant is a startup. And sometimes, frankly, we have to learn the lesson a few times before it sinks in. Even things like service and sales are startups. Other car companies, OEMs, they don't own their sales and service. So we have to create our service network. We have to create our sales and delivery network. We have to do this in, 40 countries, multiple languages. Something that people don't really even know much about is our internal applications team that writes the core technology that runs the company. We are not dependent on enterprise software. Like, for those who understand what this means, this is a very big deal. And my hat is off to the great work of the internal applications team. They write the nervous system, the operating system of the company, the Tesla operating system. Extremely fundamental. Obviously, insurance is substantial. So insurance could very well be on a 30-40% of the value of the car business, frankly. And as we've talked about before, with a much better feedback loop, instead of it being statistical, it can be specific. Now, obviously, somebody does not have to choose our insurance, but I think a lot of people will. It's going to cost less and be better, so why wouldn't you? And the whole autonomy thing is a startup. The computer chip designing our own computer chips was a startup. Obviously, cells are a startup. Designing and making our own power electronics for the drive units, designing, manufacturing our own motors, chargers. The supercharger network is a startup. The thing I think that people just don't really understand about Tesla is that it's a whole chain of startups. And they're like, well, you didn't do that before. Yeah, but we're doing it now. And I think so far we've maybe been a bit slow with some of the startups, but I don't think we've had any of them fail. So far so good. No plans to spin anything out. That just sounds like added complexity.